Good afternoon, everyone. So it's the month of November, and welcome to our monthly market updates for busy people series, where we will get you up to date with the global stock market while you are having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insight, and this is your express session to get up to date with the stock market. Right, since we are doing this over lunchtime, we'll keep it to 30 minutes. I will start the timer when we start. All right, so we'll cover the market highlights. We'll also cover the major stock market indices performance and the upcoming potential opportunities and risks out there as well. And of course, we'll wrap up the session with some Q&A. So are you guys ready? You may type me in the chat if you are ready. Right, so let's get started. Right, just an important note before we proceed, whatever we share here today is based on the latest data and also facts. All right, if there is further development, things may change. And we want to make sure that you are aware that we are not a licensed investment advisor. What it means is we do not give any buy or sell signal, and we do not manage customer funds. All right. So we are an educational institution. So our purpose here is to educate people so that you can make your own decision and be your own investment manager. That way you have a better control over your decision and be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here is meant for educational purposes only and must not be taken as a recommendation to buy or sell. All right. So let me just start the timer. Okay, so as usual, let's start with the market highlights first. So what are the factors affecting the stock market over the month of October? So first of all will be the China and US trade talks. As we can see, Donald Trump has been flying over to Asia, come to Malaysia, then after that go to South Korea to proceed with the talk with China. All right, so what happened during the talks? So during the South Korean talk between Donald Trump and also Xi Jinping, so they managed to have a deal whereby they will have a 1 year of trade truce. 1 year of trade truce, whereby the US will reduce the tariff on Chinese goods from 57% to 47%. And also at the same time, they will cut the fentanyl tariff from 20% to 10%. All right, and in exchange, then China will delay the export restriction of the rare earth materials to US. So they will resume the shipping of the rare earth to US for the coming 1 year. So this is the outcome of the trade talks. And also at the same time, China will resume the purchase of US soybean. All right, so this is one of the criteria that managed to get the truce as well. And lastly will be the easing semiconductor restriction. Of course, this one we don't have much update yet. And we can see that Jensen Huang recently also, the CEO of NVIDIA, Jensen Huang also fly to South Korea. But so far, we don't see a major news about this easing semiconductor restriction yet. But for now, Donald Trump do reverse some of his earlier comments whereby he want to tariff the China 100% and also further restrict some of the semicon, which that one already, he already made a U-turn on that. All right, so from here, we can see a sign of de-escalating between US and China over the trade war matters. And you can see that the market also, because of that, rallied after the news came out. All right. So for now, I would say the trade war situation has been de-escalating until we have the next meeting again. All right. But the overall 1 year trade truce, I would say, is quite positive for the market. It provided some stability to the market. All right. So other than all these trade talks, so over the month of September and also October, we do see a lot of AI development or AI tech deals in the AI industry. All right, so how many of you followed the OpenAI deals and also the recent NVIDIA announcement? You may type me in the chat as well. All right, so back in September, late September, I think around end of September, OpenAI managed to have a deal with NVIDIA whereby NVIDIA will invest in OpenAI. And OpenAI, in exchange, in order to get the investment, they will buy NVIDIA GPUs. And this is what people call, all the analysts or all the news around the online sources about investing will talk about all these AI industry deals. They talk about circular deals. All right, so whereby NVIDIA invests in OpenAI, in exchange, OpenAI buy GPUs from NVIDIA. And during the October, we have a series of companies making deals with OpenAI as well. So we can see that AMD also have similar deals, also a circular deals whereby in exchange of purchasing AMD GPUs, OpenAI will be able to get the share of AMD, depends on the milestone. All right, and of course, Oracle also have a deal with OpenAI to set up 300 billion revenue of 300 billion projects about data center, and also Broadcom also get deals from OpenAI whereby is a collaboration to develop their own chip or custom chip. All right, and other than that, we can see a series of deals also coming in, including Walmart also working with OpenAI to deploy some of the agentic AI's shopping experience, and also PayPal also working with OpenAI now. And you can see the overall AI industry, because of the deals, has been rallying, causing the semiconductor to also rally to the all-time high. All right, and other than OpenAI themselves, NVIDIA, during the recent AI GTC conference, all right, NVIDIA also announced a series of collaboration or partnership or investment in all these different companies, for example, like Nokia, over the 5G or 6G infrastructure, and also working with Palantir on enterprise solutions, and also a series of infrastructure announcements with different companies, including the government side. And of course, lastly will be the quantum computing related solutions, with they are working with the energy department to set up more supercomputers as well. And this actually sparks another cycle of rally in the AI industry as well. You can see all the related tech stocks has been breaking new highs, especially the semiconductor stocks. All right, so this is what happened in the AI space. And other than that, other than the industry news itself, other than the trade talks, we also have the central bank. All right, so the central bank actually having some rate cut as well. All right, so during month of October, end of October, I would say last week, Jerome Powell announced a rate cut. The Fed announced a rate cut of 25 basis points, and now the US interest rate is at 4%. Right, and employment data would now be in focus. During his press conference, he mentioned about the Fed are actually watching the AI as well, AI development as well, because they do see that, all right, there is a sign now, a lot of tech retrenchment, a lot of like software engineers or other tech related job has been retrenching. You can see that time to time, you can see big corporate or big techs are having a head cut, a staff cut, right? They will fire some of their employee, all right, not fire, I would say, but retrench some of their employee. So time to time, you can see news from Google, news from Amazon, they are retrenching, all right, especially the tech workers, including Microsoft as well. All right, so the Fed will also monitor this development, whether how the AI will affect the economy as well. And lastly will be the end of the quantitative tightening. All right, so during the press conference, so they mentioned about the end of QT, quantitative tightening will be happen on 1st of December. All right, so we will see a more dovish Fed going forward. However, there are some more hawkish comment as well. For example, like when asked about what about the December rate cut, so Jerome Powell said they are still up for discussion. All right, still not yet confirmed, not yet decide. All right, so this makes the odds of December rate cut drop from original 92% to 67% according to the Fed Funds futures. All right, so this is what is the central bank development so far. So overall, people do foresee that next year the Fed may continue to rate cut. All right, if let's say the unemployment continue to go up. All right, so other than the AI causing the jobs cut, at the same time, the US government shutdown also may cause some firing of the Fed employees, and this may contribute to the unemployment as well. So the unemployment data or the employment data will be the most important economic data to monitor going forward, whether the Fed will continue to rate cut or will pause the rate cut, because the Fed do anticipate that inflation may be going up because of the tariff, but they do see that it's just transitory, which is temporary, and it could be like flatten around 3%. All right, so now the focus will be the unemployment. If let's say unemployment continue to go up, then the Fed may continue to rate cut more frequent. All right, so let's continue to monitor these important inflation economic indicators. All right, and the next one will be another factors that affecting the stock market will be the tech earnings. All right, as we know that month of October would be the earnings season, so a lot of big tech has been announced their earnings. All right, so for those active in the monitoring the earnings, I would say overall we do see that there is a mixed tech earnings. All right, so some companies are announcing a very good earnings, some companies are missing their earnings. All right, so it's overall, I would say it's mixed. But something interesting we observe from the overall the tech earnings, like for example the earnings from Google, earnings from Microsoft, earnings from Amazon, earnings from Meta, we do see that they are all increasing their AI capex. All right, capex means capital expenditure, so they are spending more money on AI infrastructure, even higher over the last few quarters, and they do foresee the outlook do tell us that going forward in 2026 it may increase as well, and some even mention increase significantly. All right, and what does it mean is it likely may benefit all these AI infrastructure related companies and also industry. All right, but something we also observe this round will be also some of the analysts start to concern about the increasing cost. All right, so because as we know, all this AI infrastructure involves GPU, which is graphics processing unit, and all these graphics cards are depreciating fast. All right, because every few years or I would say every year you will come, the companies will come up with a faster model and also cheaper model. Hence, you can see the depreciation also impacting the cost as well. All right, but overall, I would say if you based on the overall like the industry view, I would say that a lot of companies still increasing their capex, and there's still a lot of saying about the world lacking computing power. All right, so that's why people are building up all these supercomputer, all these AI data center. All right, so what is the outcome of the stock market, or I would say what is the outcome of the indices in the US as a result of all these factors? So we do see that the market continue to break the new highs, and now both indices at a higher valuation level. All right, at a stretch level now, and it may pull back anytime. All right, it may pull back because usually if the market is too stretched, then some funds may profit take, or some it may pull back to a support first, and to find a new direction again. All right, so as an investor or traders, so you may do your due diligence, to monitor what happened to the market next, do some technical analysis, do some fundamental analysis, then make your own decision, and also manage your own risk as well. All right, so this is an overview of the markets. And other than that, other than we taking a look on all these major market highlights, let's take a look on the overall stock market performance over the past 10 years as well. All right, so let's take a look on the past 10 years. How does the Nasdaq 100 do? All right, so the Nasdaq 100 represent the top 100 tech stock in the United States, and we can see that overall the past 10 years the return has been around the indices performance have been around go up by around 500%. All right, so per year average will be around 50% plus. All right, so based on the past chart performance. Right, and for the S&P 500 over the past performance will be over the 10-year will be around 230% and average per year around 23%. All right, and from the chart you can see that the US market keep breaking new highs. All right, so we can see that in the catalyst I shared earlier on, or the highlights I shared earlier on, the trade talks development has been providing some stability. All right, so the trade de-escalation has been providing some stability to the market, and also the tech earnings. All right, the tech earnings caused some big tech stocks to rally, and it provided some catalyst or provided some rally to the indices as well. All right, other than that, the rate cut also provided catalyst for the recent rally. All right, so the market now is at a very stretched level. All right, and also at the same time, the overall valuation on the high side. All right, so investor or traders, let's say you're approaching the stock market, then you may patiently wait for a pullback first to a strong support level for any potential opportunity for you to plan your trade, or any potential investment opportunity for you to plan your investment. If let's say you are already have some trading plan or investment plan, then you can work on all your decision making process and so on. Of course, like for our student, we will have a process map, so do your own due diligence as well. Do double check, all right, where is the support levels and how should you manage your risk. All right, so I would say even though market is at a stretch level, so you can still do your homework and prepare for upfront potential opportunities going forward. If let's say there is a pullback or there is a deeper pullback, then it could be your opportunity to capitalize on all these opportunities. However, I would say for now, if you know short-term trading, all right, so you may capitalize on the short-term opportunities as well. So for example, like trading intraday where you have no overnight risk, or if you see any good opportunities, you may still also plan out your trading plan. All right, so this is what we see in the US market. All right, so other than the US, let's take a look on other market as well outside of the US. So China, all right, so China over the past 10 years, the chart performance is around 20.37%, and the average per year performance is around 2.04%. All right, and China recently has been recovered into uptrend after the latest trade talk development. All right, so you can see that the trade talk actually provided stability in the US market. Also at the same time, it provided stability in the China market as well. And recently, the China market also recovered because last month, during the month of October, they are having a better GDP compared to the forecast. All right, so this also provided some stability. All right, and also China at the same time, they are still having a lot of stimulus of the economy by the government. So the government do stimulate the economy actively in China as well. This is because over the past, China has been having some underlying economic problem. For example, like the property slowdown, the low inflation, which people call it deflation, and also overproduction of industry goods. For example, you can see that China has been overproducing their factory goods. For example, like all these EVs has been overproducing, and also at the same time, a lot of electronics gadgets also facing all this overproduction issue. Hence, it slowed down the overall market, and the government have to step in and do some stimulus, all right, in order to support the economy. And also at the same time, China retail also slowing, and the Chinese government also actively stimulating the retail market by providing some subsidy for new electronics gadget purchase. All right, I would say that overall China market still have good companies there, still have a very good valuation company there. However, it's facing a lot of geopolitical headwinds. For example, like the competition between US and China in the tech space, in the trade war, and also at the same time, also they may face all these different geopolitical issues like the Taiwan issue as well. All right, at the same time, also they are having some economic slowdown. For example, the property market still not yet resolved, and also at the same time, the overall economy is slowing down over there. All right, but the government is actively providing stimulus to the economy, and I would say if you are experienced investor, then you may also check out some of the Chinese markets development as well. All right, but let's take a look on other market first. So next one will be the Hang Seng Index. So Hang Seng Index is the Hong Kong market, and over the past 10 years, the performance is around 8.31%. and the average per year return is 0.83%. And Hong Kong market, I would say, is strongly affected by the US market, and also at the same time the China market, strongly affected by the China market, and at the same time affected by the US market as well. All right, this is because Hong Kong as a financial hub, they are also a Asia financial hub, so they may affect by all these international data stock market conditions, and also at the same time, because of its part of the region of China, they are also heavily rely on China economy. All right. So if let's say China slow down or anything happen to China market, then it may affect the Hong Kong market as well. And the chart recently has been going in sideways after the early rally this year because of the DeepSeek moment. And also we have all these trade talk development, provided stability, and also during the second half of this year, they do approve some of the Stablecoin Act over there as well, and it provided some rally of some of the fintech stocks in Hong Kong. But after a rally now, it's going into sideways as well. All right, and the latest trade war development provided some stability to the Hong Kong market. And I would say Hong Kong market also is a volatile market. It will be strongly influenced by the China government. And we also see that recently Hong Kong economy also slowing down. It may likely because of the macro development of the US-China trade war, and affected by the China economy and also now international trade. All right, so Hang Seng Index also, you can see over the past 10 years, the performance has been going sideways. And lastly would be the KLCI. So let's take a look on KLCI first before we see the overall performance, comparing their performance. So KLCI recently has been developed, or I would say trend reverse into uptrend. All right, trend reverse into uptrend. All right, and the recent diplomatic development, for example, we can see that we are doing well in terms of diplomacy with China, with US, and also with the recent ASEAN conference. All right, so this provided some certainty to the market. And I would say the upcoming Sabah election, all right, so the state election in Sabah in the month of November may move the market. All right, so because the results from the election may indicate the current administration political stability as well. All right, so over the past years, if you read around all these news about foreign funds inflow and outflow to Malaysia, it's all about political stability. I would say since COVID time until now, all right, people are very concerned about the political stability, and over recent years has been improving for the current administration. And you can see that the stock market do recover because of the certainty, and foreign funds, some start to flow in, for especially the data center side and also some of the AI related development. However, the upcoming Sabah state election will be a key market mover for Malaysia as well, because the results may show that whether the current administration still have the political stability or not. All right, so the upcoming Sabah election, then even though the 2027 only we have a national election, but the upcoming Sabah election will give us some clue as well. All right, and having said that, even Malaysia over the 10 years has been in a negative region. All right, but I would say Malaysia still also have good stocks in Malaysia market. For example, like the recent AI trends, data center development in Johor, and all these property market development in Johor as well. So all these industry are also having some good stock in Malaysia as well. All these industry do have good stocks as well. And overall Malaysia, some of the stocks are still good stocks. All right, so if we compare the overall indices, let's say you compare the 10 years performance, all right, so from Nasdaq 100 to S&P 500, the US market, then compare the China market, compare the Hang Seng market, compare the Hong Kong market, compare the Malaysia market. So which indices provide you the most consistent performance? All right, so you may type in the chat which market provide you the most consistent performance. All right, over the past 10 years. All right, I would say US market. And if you take a look on US stock market, you can see that there are a lot of global brands there. All right, so for example, when we talk about all these Apple, iPhone is from Apple, listed in US. When we talk about search engine, it's from Google in US as well. And now we are in the AI era. So if we are checking out the top AI companies, all right, most of them are coming from the US as well. All right, so how many of you can, maybe some of you can mention some of the great, or I would say great names from the AI industry. You may type in the chat, and what are the great companies, what are the top AI companies that are listed in the US? All right, you may type in the chat as well. All right, yeah, so for example, like NVIDIA, like Google, like Amazon, all these are also strong AI companies that listed in the US market. All right, so other than comparing the index performance, let's take a look on what are the key important information from the recent earnings as well. As we know, recently, Microsoft, Meta, Google, and also Amazon has been announcing their earnings. And from their earnings, what are the key lessons we can learn from? All right, so first of all these companies has been delivering strong results. For example, like Alphabet, Google has been managed to reaching their first 100 billion revenue quarter, which means that quarter revenue alone reached 100 billion, and it was contributed by all these different segment, including search engine, YouTube advertisement, and so on. But what is the important key observation among all the earnings will be the AI capex, all right, artificial intelligence, capital expenditure from all these big tech companies. All right, so we do see that through the earnings, they do mention about AI capital expenditure continues to increase. All right, they do mention about they'll spend more in AI infrastructure. All right, so what are the key information we can have from here, or what are the key learnings we can come from here is like, if let's say a company spend more on AI infrastructure, all right, so what industry or what other companies or what other vendors likely may benefit? All right, so from here we can see that if let's say the companies continue to spend more money on AI infrastructure, so other than building the data center, I would say more than 60% of the data center will be AI data center will be GPUs. All right, so in this case, companies in the industry chain likely may benefit. For example, those companies that are making CPU, those companies that are making GPU. So CPU is central processing unit, like our laptop computer, we will have a CPU inside our computer. Then graphics processing unit is the graphics card. So nowadays, graphics cards are very powerful in doing all these AI computing. They can do a lot very fast parallel computing calculation. So AI, you need GPU. All right. So at the same time, also HBM, high bandwidth memory companies may also benefit. For example, let's say you want to calculate the AI calculation faster, then you need high bandwidth or high speed memory. So all these high speed memory makers or provider may benefit from these major capex as well. And also at the same time, for AI, you need data, and data, you need storage. All right. So all these solid state disk company or hard disk company may benefit from all these capex as well. So as you can see, all these from their earnings for Google, Meta, Microsoft, Amazon. All right. So they has been spending. They are continue to increase their capex going forward. This is their 2025 guidance. You can see that Alphabet increased from 80 something billion to 90 over billion. Meta from 60 something billion to 70 something billion. And Microsoft, because of this is their financial year is different from the rest, so they only provide the quarter one. But if you recalculate the trailing 12-month capex is around 100 billion as well. And for Amazon, they do mention that this year they may spend until 125 billion. Right. And all these companies also mentioned about for financial year 2026, they will continue to increase their capex. All right. And some even mentioned about significant increase. All right. However, some of these stock after announce their capex, like for example, Meta, after they announce their capex, their stock price actually come down. All right. So why does it come down? Is people start to concern about high capex may affect their margin. All right. Like I mentioned earlier, all these GPUs, high bandwidth memory and SSD, every year you can see a new model coming out, a faster model coming out. Hence, the depreciation is very fast. And now some of the analysts start to concern about if let's say the companies doesn't have a strong cash flow, or if the demand is not there, or those capex cannot generate revenue, then it may affect their margins. All right, because all this depreciation also counted as their cost as well. All right, so this is some of the concern as well. All right, but of course, whether it's a bubble or not, I don't have a crystal ball. But as an investor or as a trader, we can always do our due diligence, check out what are the potential risks there, and also manage our own risks. All right, so this is what we observe so far. We do see that some of the analysts start to concern. All right, and if you know how to analyze certain companies, all right, you may also see some of the companies are still okay, still healthy. Some of the companies already having high debt. All right, so this is important. If let's say this is an important differentiator, if let's say you have knowledge or deep knowledge about the companies, then you may decide from there how you manage your risk, whether these companies are too aggressive or whether these companies are okay, still okay. They are still having the enough cash flow and also cash position to continue to fund the capex. All right, so other than that, let's take a look on the macro side. So just now we are talking about industry. All right, so now let's take a look on overall money market side. So there are still money on the sideline. So this is the money market funds chart we get from online or some of the sources. So there are still record of 7.4 trillion of cash on the sideline in the money market funds. All right, and what is a money market funds? It works like our FD. So like retail, like normal people like us, usually when we have extra cash, we park our cash in fixed deposit. All right, and we earn some interest. All right, so same for all these big funds. All right, if they have additional cash, they have cash position, they may park their cash in all these money market funds to earn the interest. All right, and now the US interest is still around 4%. So some of these funds are still stocking up on cash to take advantage of all these high risk period. All right, so now we can see that the interest rate in US is around 4% and the inflation is around 3%. So there are still a 1% difference. All right, but we do see that there could be asset rotation may happen. All right, asset rotation may happen if let's say the rate cut continues. All right, so for example, let's say next round they cut again to 3.75%, then the inflation still around 3%, then you can see that the difference getting lesser and lesser. and some of the funds may start to rotate into more the risk asset, like for example the stock market, to get higher returns. All right, but for now they do see that 4% versus 3% maybe still worth it for me to park in the money market funds. All right, for all these funds out there. All right, so what is the latest rate cut development? During the October, the Fed rate cut around 25 basis points from 4.25% to 4%. So there's still potential one more cut in December. However, during the press conference, like I mentioned earlier, Jerome Powell do say that, all right, so it's still not yet decided. Hence, the odds dropping from 90% to now 70%, around 69% only, all right, according to the Fed Fund futures. All right, so we may continue to monitor the money market funds, so whether it's continuing to go up or when we start to rotate around and go to other assets. All right, and also the other market factors will be what are the potential negative factors, which is the risk, or what are the positive factors, which are the opportunities there. All right, so we may want to understand the overall market condition first. Also, so where is the risk? Then where is the opportunity? All right, first of all will be the tariff. So I would say the tariff time to time may still cause some volatility to the market. Like for example, especially when they have trade talks ahead. Like for example, last month during early October, all right, Donald Trump suddenly tweeted about 100% tariff on China ahead of their meeting. All right, so this is how he bargained. All right, this is how he negotiate. All right, so time to time this may cause volatility to the market. And as we know, tariff also is a inflationary policy. So this may also cause consumer discretionary, may affect some of the consumer discretionary sector or companies. So for example, like even staples, all right, for example, like Walmart do already mention about during their earnings, they mentioned about increasing costs for them. All right. And also some of the US companies, some of the retail may absorb the tariff costs, and this may affect their margin. Hence, this may affect the consumer discretionary sector and also the consumer staple sector. And also with all these tariff deals, so a lot of factories start to move to US as well. All right. And as we know, the manufacturing cost in US likely could be higher compared to the rest of the world, like the Asia region. So this may also cause price of goods to go up. For example, like electronic stuff that built in US or the semicon that built in US may have a higher cost. Hence, the cost may pass to the consumer, and it may cause inflation as well. All right. So this more and more factory invest or built in the US, it may benefit the US jobs market, but it may cause inflation there as well because of the higher manufacturing costs. All right. So other than that, the export restrictions. So time to time, because the US current US administration or the Donald Trump government or the administration want to bargain over certain trade deals with different nations, they may use this export restriction to have some bargain power. All right, so they may restrict some of the AI chip export or control the chip export to other countries. For example, like how they do it in China as well. All right, they ban China from accessing certain chip in order to like to have some bargain power. But of course, China still have rare earth as well. So time to time, you may see all these export restrictions from different countries. For example, China will use the rare earth. US will use the semicon, especially AI chips. All right, and this may cause some volatility to the market as well. All right, and other than that, also some concern on the high AI spending. I do see some of you just now ask in the chat later. I'll address that in Q&A. But some of the analysts start to concern about all this high AI spending. All right, so and also we do see that increased competition in the market. All right, so you can check over the last 2 years, maybe every one of us, when talk about AI, we talk about ChatGPT. But nowadays, you can see a lot of different solutions. For example, Google have their Gemini, also is getting better and better. And also like XAI, Elon Musk company also have this Grok AI, which is getting better and better as well. Then also we have Anthropic, which is another startup, which is also from some of the ex-employee from OpenAI. And also we do see that Amazon also working with Anthropic and so on. So it's getting stiffer competition now. We do see increase in competition as well, especially in the software space. All right, and all of these companies are still spending a lot of money to build their infrastructure, all right, because the higher computing power you have, the better position you are. So a lot of them still spending the money. So in this negative factor, I would say for this risk will be for those companies that are already in high debt or have a very low cash flow, then they may in a disadvantage, all right. So some companies do have higher debt compared to the rest, some still in a very strong balance sheet. All right, so if you know how to analyze all these fundamental of the company, all right, if you know how to analyze all these fundamentals of the companies, then you should check whether their cash flow is okay, whether they are committing a high debt or not, whether the companies are making over aggressive decision. All right, so these are important factors. But I would say overall, you can still find good companies, all right, in the AI space. All right, so some is really in a good position, some is on the high risk side. They are over aggressive in terms of their expansion. So if you have knowledge on this, then you can do your study, all right, do your own study. All right, so other than that, we do see time to time may have antitrust regulation as well. So for example, like Google recently has been clear of the antitrust regulation on their Chrome. They no need to sell their Chrome, and also in order to split their Chrome and search engine, so they no need to do that. So you can see the stock price reacted positively. All right, but I would say with the AI kick in over the next few years, so as companies start to dominate in this space, then you may see more antitrust regulation coming in as well. And also government may want to regulate the AI space as well. So time to time, we may come across this news or this event. And other than that, we also see that the tech and government will continue to lay off their worker. So US government, as we see, they want to reduce their expenses or deficit. So they may continue to fire the Fed workers, all right? And other than that, the tech space, you can see Microsoft, Amazon also is retrenching, all right? So, and also Meta also retrenching. So this may slow down the consumer spending, because if let's say you lost your job, let's say touch wood, all right? So if let's say US people lost their job, all right? So citizens lost their job. So will they still spend more on grocery shopping, all right? So something to think of. So if let's say all these layoffs continue, then it may also slow down some of the consumer spending, like the grocery and so on. All right, and lastly will be the drug price control. So as we know, Donald Trump's policies, their government's policy, is some of it is to control the drug price, and this may affect pharmaceutical companies and also biotech companies. All right, so these are the risks out there. So it's for us to manage, but usually in the market, there will be always negative factors. There will be always time to time come out negative news and so on. So what's important for us is to understand how we can manage the risk, how we can limit our risk. Then at the same time, we find the certainty in the opportunity side. So what are the positive factors in the current market? All right, I would say AI is still the catalyst, all right, especially the next cycle will be the AI device upgrade cycle. All right, so as we know, in the past few years, it has been always about expansion of data center infrastructure, about training. So now it's about inference space, inference part, whereby it's the reasoning part, whereby user interact with the AI. All right, so we can see that, yeah, with this cycle, more and more data center required as well, because it involves computing power as well. And also at the same time, when we use all this AI application, all right, we do need more powerful computer as well. All right, so for some of you that are using all these AI tools or hosting the AI in your local computer, you may notice that it takes up a lot of RAM and also computing power, and you need a very good GPU, all right, for the calculation. Else your AI will give you a very vague reply if let's say it's lack of computing power. So you can see that the upcoming AI devices will require more powerful CPU, more powerful GPU, and also more memories. All right, and this may benefit all these storage-related company or memory-related company. All right, and also the expansion of all these data center and infrastructure, and also all these AI deals. All of these need data, and all of these need memory as well. So you can see that some of the memory stocks or the storage-related stocks, like for example hard disk-related stocks or SSD-related stocks, has been rallying also. And with everything online nowadays, cybersecurity also one of the important industry to watch out for, because you can see more and more hacking through AI as well, more and more scams through AI as well. So cybersecurity also in high demand. All right, and of course the AI PC upgrade cycle, we already 5 years plus over the COVID time. So more and more people may upgrade their laptops and also computers, especially when AI start to be more common among consumers. For example, now we have AI phones, we have AI laptops, we have AI computer as well, AI desktop as well. All right, and all these AI infrastructure deals, those are open AI related deals, and also NVIDIA's recent announcement also benefit the overall industry. All right, however, something to take note is now the valuation is on the high side. Everything is very stretched. So you may want to do your own study first and wait for the overall market to pull back further first, all right, to get a better valuation. All right, other than that, other than AI, we do see that fintech is another potential industry that are still having good development. So for example, this year US government or the US side has been passed the Genius Act. So Genius Act is for the stable coin, and also at the same time also they are talking about real world asset tokenization now. All right, so this may benefit the finance sector, the broker industry, and also the payment system. And we do see that more and more companies in the financial industry start to apply blockchain into their system. All right, so blockchain technology also getting implemented in the financial sector, and it may benefit all these finance industry companies. All right, so do watch out for the development in the financial sector as well. Right, so other than that, interest rates are sensitive industry also may benefit, because we are at the rate cut cycle now. So some of the small caps may benefit from it, because small caps, as we know, they are having a lower cash flow compared to all these big companies. So they usually run on loans, all right, run on run on debts, all right, to fund their business. So if let's say lower interest rate, it may benefit because they pay less interest expenses. All right, and also for home builders, as we know, the housing market has been slowing because of the high interest rate. All right, so in the past, the US mortgage rate go as high as 7%, almost to 8%. All right, with the rate cuts started, then we may see the mortgage rate in the US are coming down as well, and this may benefit the home builder industry as well. All right, and lastly will be the healthcare sector recovery. So recently, Pfizer do have some pricing deal with Trump administration, and this triggered the overall healthcare sector's recovery. More certainty over there already, because early on, the healthcare industry has been facing sell-off because of the uncertainty in terms of the administration's policy. But now, since one of the company managed to get a deal, hence they will able to see some certainty there. Hence, you can see the market start to rally over there. All right, so healthcare recovery also is one of the key themes or positive factors that we can monitor the development. All right, so having said that, this is just a 30-minute market update. If you take a look on the topic over there, like for example, opportunity and risk, it may take up a few hours just to deep dive into all these factors. All right, but of course, the stock market also is a big market. So this is just a 30-minute market update. So we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic way, versatile way, and also a safe way. All right, so we have the most systematic course in the market. We have process step for every trading style. All right, so in our workshop, we usually cover investing and also swing trading and also trend trading. And if let's say for those interested in advanced courses, we have intraday trading as well. And all of this has process map and a systematic way as well. And we have versatile strategies to handle all market conditions. You can see that just now different trading strategy or different trading style to handle different market conditions. And also we have a safe approach to properly manage our risk. All right, just now we can see a lot of risk out there. But like Kathleen usually like to quote or like to say, like we always find the certainty within the uncertainty. All right, so how we can do it, we can manage our risk properly from there and also focus on the right industry or focus on the right sector. All right, and now is the best time for you to learn a systematic way to trade or invest to capitalize on the upcoming opportunity, because even though market at a stretch level, we do see that it could be like the next time there's a pullback. We don't know when will be the pullback because I don't have crystal ball. But if let's say there's a significant pullback or major pullback going forward, then there's plenty of opportunities out there. All right, of course, you need to plan some time to practice and pick up the skill set while waiting for the opportunity and get yourself ready when the opportunities come. All right, also we have a hybrid class for workshop. We have face-to-face workshop, we have online workshop. So do join us in a 3-hour webinar to find out more. So the next available webinar will be on coming Thursday, all right, 6th of November, 7:30 p.m. You may scan the QR code to register. All right, if you find this market update is beneficial to you, you may recommend it to your friends. All right, so other than the upcoming 3 hours webinar, we also have some advanced courses as well. So for example, let's say for example, we have macro insights which cover the trend and also major macro factors to impact the stock market. For example, like the money supply and also the money flow. So how does it affect the market? As you can see just now, the money market funds already at the all-time high. So if let's say the rate cut cycle continues, then it may have some asset rotation. All right, and we also cover some of the relationship between markets. For example, like stocks, currency, cryptocurrency, bond and commodities. What are the relationship between those assets and how does it affect the stock market? All right, and we also cover how funds usually move or rotate when it comes to important macro events. All right, for example, like the rate cut will be an important macro event. All right, and we also have industry insight courses where we cover the top 8 industries, including some of these AI companies. And in the last booster session, we do cover about the open AI deals. All right, so for some of you that is our students, we already covered about the open AI deals, whether which companies are in a better position, which one is more aggressive. All right, so and also at the same time, we have company insights where you can deep dive into the company's balance sheet and understand more about the company. All right, so if you're interested in these more advanced courses about all these macro related, industry related or the company related, you may scan the QR code to register interest as well. All right, so that's all for my today's market update. I'll open the floor for Q&A. So any question you would like to ask, you may type in the chat as well. So we have a Q&A now. All right, so one of the questions come out earlier. So with so many deals, but open AI, so many deals, but it may be a virtual deal. All right, so where it gets the funds, the company still losing money. All right, does it mean once the AI capex reduce, the bubble will burst? All right, so first of all, for open AI first. All right, so open AI, as we know, is a startup. All right, so where they usually get the money will be from all these venture capitalists. All right, all these venture capitalist fund and private investor. They manage to get, let's say they manage to get some private investor coming in, will fund them through there. or they may raise debt as well. All right, they may raise debt as well. And also at the same time, they may partner with other companies. Like for example, they has been in the past partner with Microsoft, partner with Nvidia. So this is how they get the funding. All right, and for now, based on my understanding in the some analyst articles back in around early 2025, so they are still losing money now. All right, they are still losing money, but a lot of venture capitalists willing to provide them investment still. All right, because they have this they have this viral product like ChatGPT, Sora AI, and so on, which people do see that potentially this may disrupt the overall industry in the tech industry. All right, so still a lot of confidence from the investor. That's why they still manage to get a lot of funding. All right, but some risk there as well because majority of the OpenAI users has been free users, and they are still have limited exposure to the enterprise side. And they are still facing a lot of strong competitors, like for example, Google, Amazon, Meta, all strong competitor. All right, so I would say whether there's a bubble, yeah, there could be bubble are forming, but whether it's burst, still won't know because how the I would say how the founder Sam Altman see this situation will be. He do see that there's an inflection point around 2030 where they will have exponential growth and they may able to make money from there. All right, become profitable from there. However, from 2025 to 2029 or 2030, still around 4 years time. So anything can happen in the next 4 years. A lot of things can happen in the tech space. So you may want to be more cautious when it comes to like, I mean, we may want to be more cautious and also do your study and manage the risk when it comes to all these AI space. All right. So some of the companies have a great strong balance sheet. Some are in a negative region. So whether over the next 2-3 years, OpenAI still will be the dominant force in the AI space or some strong competitor may come out. So do remember the DeepSeek moment that from China is always an important lesson learned from us. All right. So do manage your risk properly. All right. Do manage our risk properly. All right. So does it mean that once the AI capex reduce, the bubble will burst? All right. So anything can happen in the market, but for now, all of them still giving good capex. So you may manage your risk from there. And for those is our student, you have already have a process map for it. You may follow the process map, manage the risk accordingly. All right. So whether bubble when will burst, I cannot tell because I don't have a crystal ball like I mentioned earlier. But I would say do watch out for suddenly any strong competitor coming in. All right. Just think of the DeepSeek moment in early 2025. All right. Suddenly China announced something that able to disturb the world again or disturb the cost of all these companies, then it may cause issue. All right. But for now, I don't see any potential competitor come out in the short term. All right. We already know on all these companies, like for example, XAI, major competitor for OpenAI. Then we have Meta on their Llama AI. Then Microsoft have their own AI engine nowadays. Then Google have their Gemini. Then OpenAI have their ChatGPT, and of course, Anthropic have their Claude and so on. All right. So overall, nowadays they are still in a competition phase. So who will dominate? Maybe next 2-3 years we may know more. All right. Right, next question about Berkshire Hathaway. All right, Warren Buffett's company have been exiting and lightening their position in number of stocks. Does it indicate any signal? All right, so preparing their war chest to enter a discount market. All right, so it could be Warren Buffett companies is having their own risk management. So they could be like potentially they have their own entry plan and exit plan. So potentially they see that the market already at the high valuation or high risk side based on their own criteria. So you can see that every investors or traders, they have their own exit and entry and exit criteria. All right. So some is more towards value investing, some towards trend trading, some towards growth investing, and so on. So each of them have their own risk management criteria and also entry criteria. Then it could be for Berkshire Hathaway, they already see that the market is on the high side and they want to manage their risk. All right. So they may want to hold more cash. Then maybe when there are more major events, and when there are good valuation, they may want to come back in. So they are in a different, I would say for them, they are in a different, I would say different view of the market compared to some of the other funds or other traders that having a different strategy or entry criteria. All right. So some of the companies, yes, for now, the valuation is sky high now. Some are still okay. So it depends on whether what they are focusing, all right, what is their strategy. So I would say from here, just make sure you do have a risk management plan as well, because like you can see Berkshire Hathaway, they have their risk management plan. They start to lighten because they see the valuation is high. All right. So as an investor or trader, so what will you do? All right. So you may also think of what is your entry criteria, what is your exit criteria, and what is your risk management system. All right. So this is how I can answer you. All right. So some of you asked about Palantir good earnings, but the stock dip. All right. So yeah, do study the company earnings report. There's a transcript in the press conference. They do announce, but I haven't take a look on Palantir report yet because I think it just announced recently this morning. So I haven't take a look on Palantir. But I would say overall the valuation is already sky high. All right. So some of you type in the chat also, the PE already 630 plus. All right. So it's a very, very expensive or high valuation stock now. And it could be market is expecting high expectation. Now having a high expectation on Palantir results. And somehow they do deliver the result, but not per expectation, or people expect more. Then it may cause the stock price to come down because it's overvalued now. All right. It's way, way, way overvalued now. All right. So next question, are there still risks to the market stemming from US-China trade tension or already resolved largely? All right, I would say for now, more certainty. All right, trade talks, you can see Donald Trump quite happy with the outcome and 1-year trade truce. All right, but time to time, he may tweet because I think Trump is quite random guy. I would say quite random and aggressive in terms of tweeting, and he usually raise the bar, or I would say threaten something before he go for a negotiation. All right. So I would say not totally resolved yet, but time to time you may see some random event cause him to tweet even more and cause some uncertainty. But like I mentioned earlier, it's always about finding the certainty within the uncertainty. So if you have a proper risk management system, then it's okay because you manage your risk well. All right. So make sure you have a proper risk management and not to over trade or not to over invest. All right. So profit taking going on, the performance already factor in the stock price pre-earning. This one I think likely may be related to the Palantir question. So yes, sometimes the stock price already factor in all these factors because of the high expectation from the investor. A lot of them already factor in the stock price and cause the stock price to go up until way, way overvalue. So if let's say now the result announced and people do see that, oh, like that only, or maybe like not really what they expect, then it may cause a sell-off or profit taking. I have answered all the questions, so hope you guys manage to benefit from this market update. And again, if you find this market update is beneficial to you, do share it with your friends. And with that, I will call an end for today's market update. Thank you everyone for joining the session and see you again next month. So thank you everyone and bye-bye.